Can I start by asking, has anyone delivered a pitch that's raised $1 million? Has anyone pitched for capital? Did anyone have a successful outcome from pitching for capital? And how did you define successful?
Got the money.
That's a good start. All right, we actually take our own medicine, and we used our own planning process to raise capital for ourselves, which went through in about July last year. So one thing I learned, I guess, throughout my journey is that money's looking for good businesses, not great ideas. Entrepreneurs have great ideas. They generally don't have good businesses. So what we're going to talk about today is how do we take the entrepreneur on that journey to convince an investor that they're capable of creating a good business. And for those of you that watch Shark Tank, I think I've missed one episode so far. We've done a lot of business plans for Shark Tank competitors, both here and in the US, and in the UK we've done, what's the one over there?
Dragon's Den.
Dragon's Den. We did an Indian curry sauce going on for a second round of funding of about £4.2 million after they got about £400,000 on Dragon's Den. So money seeking good business is not great ideas. So if you have a great idea, then you need to convince an investor that you can create a good business. And that is what your pitch needs to be about. So the entrepreneur is always coming from a wildly optimistic perspective in terms of what they believe they can achieve and when, what the likely sales outcomes are likely to be, and what the expected margins are likely to be associated with that investment. The key to getting across the major hurdle with the investor is convincing them that this is actually going to be a good business when it's up and running. You might have one product, but what does the business actually look like behind it? What's the business model supporting it? And how protectable is that business model going forward? So we're going to jump into a pitch a little bit later that has delivered $1 million in funding to a number of different clients, and talk about that pitch, and I'll deliver it as if I'm the entrepreneur. That particular presentation is on a fictitious company because obviously we can't disclose clients' details, particularly at that level. So what do? We ask the questions that every investor needs answered and work with you to create better answers. That's what we do as a job. We then take all of that information and craft a set of investor pitch documents that will be the foundation of the decision. So does it work? We have about an 87% success rate with bank funding here and in the UK. The US is a slightly different market for bank funding. The banks are loaning to startups. Sometimes they'll require security, sometimes they don't. It depends a little bit on the profile of the business. Our best ever outcome was $900,000 in one of our clients' accounts 48 hours after handing them the business plan, and that was with Commonwealth Bank. We've had numerous successful capital raisings in the 200 to 1.5 million range, which is where we tend to focus. In my previous roles in venture capital and Deloitte, we're obviously working at a much larger deal size, much larger values, and obviously charged a lot more for what we did at that time. So there's not many different companies we haven't seen. I think we've done, since I started this business, 1,500 business plans, capital raising documentation alone, plus I guess another 20 years of working with startups and what have you. So we've seen everything from space technologies. When I ran the venture capital firm, we actually had a contract with Defence to commercialise defence technologies out of the DSTO. So we saw a lot of optical fibre technologies, things like that. But not every business is a high-tech company. The one I mentioned that got the $900,000 from Combank was actually a drilling company, industrial drilling. So we do work with a very wide range of different organisations. I didn't want to spend too much time on us, but I just thought I'd sort of set the scene since we've been through the capital raising process ourselves. I started the business about 4 years ago to fundamentally re-engineer the way people thought about investor documentation and create the documents as a set rather than focusing on a pitch or a business plan or an email. The team's grown substantially since that time. So Damien became a partner last year. We have Tanya as well here in Australia. David, who's the picture there, we ran some business planning events for Waira in Mexico City. David ran those for me, and in those events there were 11 startups that went through that process. 10 out of the 11 raised 350,000 within a month using the documentation we created for them, and the entrepreneurs all spoke English as a second language as a starting point to that process. So David ran that consulting program with us for Waira, which some of you might have heard of. It's quite a large accelerator program headquartered out of Spain. We've also done sessions for them in Ireland. I did one in Dublin. But they have about 8 different accelerator programs in different countries across the world. So the components of a pitch. Everyone thinks the pitch is just the presentation. The presentation's an important element of the pitch, but it's not the entire pitch itself. So we tend to view the pitch as a process. It's a process of wooing a potential investor to take a meeting with you and invest their valuable time to hear what you've got to say as the starting point. So that's the start of the pitch, and we call that the investor overview or investor brochure, investor flyer. It's just a very brief document that gives them the very high level information they need to determine, is this opportunity in the sector I care about? If it is the profile of the deal something I care about? And is the final terminal value of the opportunity something that I care about? And if you get no's to all of those, then obviously they won't take the meeting. So it's important to try and position your opportunity with some form of investor in mind, whether that's Sydney Angel Network, Melbourne Angels, whether it's individuals that are related to the company. Often that is where investors will come from distributors, suppliers, people somewhere in your value chain. Is a great place to search for potential investors and try and get the opportunity to present to them. The presentation is what you do in the meeting, and the reason for the presentation is that it's very hard to present a document in a meeting. If you've ever sat there and gone through a 40-page document in a meeting, it tends to get a bit bland and a bit dry, and everyone glazes over and nothing happens. So that's really the reason for the presentation itself, is to simplify the consumption of the information that's contained within the business plan. It's simply a representation of that content in a different format for a different form of consumption. When I was much younger, I was working for the Daily Mail in the UK, and the CFO asked me to put a paper together on something. So I wrote this paper and handed it to him, and I was surprised that the outcomes he took, or the recommendations he took from that paper, were completely different from what I intended, and I thought I was a pretty good writer. So I got him and I put him in a boardroom, and I created a presentation based on that same information, and I took him through it face to face. And his understanding of that information, which was ultimately the same core information, was completely different as a result of that presentation format as to what it is in a document. So it's important to be careful with documents because everyone reads them a little bit differently and they take information out of them in different ways. In a presentation, you have a much better opportunity to create a richer communication and control to some extent the perception of the audience to which you're presenting. So I guess this is the secret to our success, is a methodology I developed after looking at a whole range of problems with the way people went about the documentation phase. They tended to dump out what was in their brain. And as a consultant by background, we always start with the methodology, and therefore going through a planning methodology pulls out a chain of logic that's in your head, which creates a much clearer communication to the target audience. And this is just an example of one aspect of the way we go about what we do. So, our whole process has been developed around what's important to an investor. So this is a great question an investor might ask you. How are the current and future business assets of your business used to generate value? And you'd most likely sit there and stare at him blankly, not really understanding the question, what he was looking for as part of the answer. But what we try to do is break that down into something simpler. So we say, what are the 4 key assets that your business either has now or is building? Do you own them, lease them, license them? Are they under finance? He wants to know all of these things because whether they're intellectual assets or whether they're hard assets, so I've got this car, I can either own the car and therefore I've got a $40,000 asset, or I can lease the car, which might actually be underwater already, and I've actually got a negative asset. So assets is a very important concept in a pitch, because ultimately someone's buying into your business for exposure to the assets of that business. So yeah, we go through the ownership structure, and then how is that asset used to generate value? So if it's an asset, it should be used to generate income for the business in some way. Otherwise, it's difficult to justify it as an asset. And so by breaking that out and explaining each one of those aspects to the investor, you're able to more clearly communicate how this business is actually going to generate value at an underlying asset level. The other thing most people tend to ignore in pitching processes is valuation. It's great to say, you know, and you'll see it on Shark Tank or what have you, got this great opportunity, but not able to put a valuation on it. And that's a big area where a lot of people fall down, because the investor is evaluating the deal. And you'll see sometimes in Shark Tank they'll say, I'm interested in your business, but I'm not interested in this deal at this point in time. And there is a difference between, I guess, the entrepreneur's perspective of the business itself, and the deal that surrounds the business. So, the pitch that raised $1 million more than once. This is just a bit of background. We've created pitches for BASF Ventures, 3i in the UK, Innovation Capital, Uniseed, Starfish. We've got offers from all of them. When I was living in the UK, just before I was working at the Daily Mail, I worked with a guy called Simon Woodruff, who owned a chain of sushi restaurants called Go Sushi. He wanted £1 million from 3i, which was the largest VC firm in Europe, and we worked on the documentation to get him that offer. Once he got the offer, he decided not to take it, but he felt good that he'd been offered it. And that's something to bear in mind as well. Just because you've got the opportunity to take the money, it's not always the best thing to do, depending on where you're at. And you'll see that again for those of you that watch Shark Tank. Usually the sharks will come in with a fairly nasty offer, and those entrepreneurs really have to consider, I wanted to give away 10% of my company for 100,000, am I really prepared to give away 40% for 100,000? And there's some interesting deal structures and things like that that have crept in because of the limitations of that show. So there's a lot of royalty offers, loans combined with equity. So interesting as well. If you need money, equity, giving away equity is one way of doing it. With an investor, there are several different ways of structuring that deal. You can structure it as a convertible note, which is a loan that converts to equity over a period of time based on certain criteria being met. It could be you pay them a straight royalty back and they're effectively taking a mortgage over the property. So just be aware there's a whole range of different ways of getting the money, and it's important to consider early on in the process what's the best opportunity for you and your business. We've created documentations for about 1,500 companies. Probably half, maybe a bit less than half of those are in Australia. So that's the end of that one. Oops. And we're going to jump into a pitch when it comes up. So this is a sample pitch. This is a pitch format that we use with our clients that has successfully delivered funding outcomes for each client of up to $1 million. So I'm just going to run through this as if I was the entrepreneur. It's a completely fictitious company. So WindTech, we develop new and emerging wind turbines focused on better managing extreme high stress conditions. That's a critically important factor for wind farm operators who currently have to dump a lot of their wind when the wind gets over 20 knots. So they're losing a lot of their resource, and we believe we can increase the profitability of their businesses by between 20 and 25% by installing a different control module, which we've spent the past 3 years developing and have 4 granted international patents on. So we're a private company. We are a team that has worked together over the past 10 years in various large multinational companies focused on the wind energy sector. We have a very deep understanding of the market in which we operate and the customers to which we're going to sell. Business was founded just over a year ago, and we're currently seeking $1 million in funding. That $1 million is going to be used to expand our manufacturing and order 4,000 control module units, which we're going to sell directly to a range of wind farm operators. As you can see, our operating niche is wind turbine control modules. That niche is controlled predominantly by the major players, the large engineering companies that just install a control module with the unit without actually considering that as a discrete component and its ability to add value to a wind farm operator. A couple of high-level statistics just to give you an idea on the profile of this opportunity. We have a $1.2 billion market, which we believe 260 million of which is immediately addressable. It's addressable through both current and future sales, so retrofit to existing wind turbines, as well as embedding our process in the installation and specification of new modules. Our net cash flow forecast for year 5 is $24 million per annum. We're working on a current valuation of $9.4 million, so you'll get around 10% of the company for your $1 million investment. We have a projected valuation of $120 million within 5 years, and that's going to generate an average annual return for you of 209%, assuming you believe that the plan we've put in place is going to deliver. So we offer the ability to operate wind farms in a much wider variety of wind velocity situations and environment, thereby increasing the profitability of our wind farm operators by up to 50%. We have a real opportunity to act now. No one has developed a specific wind control module for this particular situation. And from our experience in the industry, we understand that the operators are keen to increase their profitability substantially. Our products are expected to generate an additional $80,000 per turbine per year. And we will be looking to take some part of this capacity gain. We haven't finalised our pricing as yet, but with that performance improvement in our customer, we have a number of different ways of pricing, including We could do a licensing program where we take a share of that gain. We can sell the product for an upfront fee. Wind farm sites are becoming more and more difficult to obtain, and the operating conditions in those sites is more and more marginal. We believe our product is going to enable wind farms to spring up in new locations where they have previously not been viable. We offer better control of the blade than any existing solution, and that enables us to prevent damage to the system in situations of high wind, where other companies or the existing solutions, if they continue to operate in those high wind situations, damage the equipment. Our team, Chuck, myself, came up with this idea whilst working at one of the major wind turbine companies, and it's been a real passion. I've been working on it for 16 hours a day since it started, and building little prototypes in my garage, which we've now scaled up to a manufacturable level. Covered that one. So, what's the customer problem that we're addressing, and how are we going to plug into that problem? Our customers that are unable to generate energy in high wind velocity periods. They're seeking a turbine that doesn't have to dump wind in 20 plus knot situations due to turbine loads. All current solutions result to shutting the turbine down in high wind conditions, and we will enable that to continue. Our range includes 3 different product groups, each one designed for a different level of installation unit. We believe we have strong credibility within the market and within our customers from an engineering standpoint, and that is going to enable our product to be specified in a number of critical applications. We distribute our product directly to customers. There are no middlemen. We own the customer relationship, and we own the contract with that customer, which helps build value in the business in the long term, particularly as referral business starts flowing in and new wind farms are developed. We have 4 key competitors within the marketplace. Some of those names you'll be familiar with. The engineers within those companies are focused on a different set of criteria to what we are. We consider ourselves economics engineers as opposed to technical engineers, and therefore we've identified an economic problem that we're bringing an engineering solution to. We know that our technology, through testing with leading institutes such as CSIRO, has proven a significantly greater operating range than the current technologies. We offer world-leading expertise in turbine design and dynamics, and we have granted patents to support that. Our business model incorporates some key aspects. We can earn revenue from licensing of the technology, sale of software, sale of hardware, development of chips. We have some key capabilities internally, which is technology, hardware development and software development. Our customers are clear and identified, and we know many of the largest customers in the world. We've partnered with the Wing Ho fabrication facility in Korea to manufacture our hard components for us, and they have strong established relationships for chip development with many of the major chip players. So, just to cap on some financial highlights, we project Year 5 revenue of $48 million, Year 5 costs of $23 million, and a Year 5 operating profit of $25 million. Our current valuation is $9.4 million. So what we'd like to do from here is give you the opportunity to meet the rest of our team and understand from them their perspectives on how the business is operating. We will leave you behind, assuming you're interested in the opportunity, a detailed business plan that lays out how we're going to make all of this happen, what our assumptions are, and how that valuation is calculated, which we believe to be a fair valuation on the company at this point in time. Then we'll move into detailed due diligence, prepare a term sheet and finalise the transaction.